demand to supply for NVIDIA chips, it's about 10 to 1, potentially 12 to 1. Look, we do these trips, 3, 4 times a year. It's about what demand looks like in the region from production. It's the use cases that are driving it, but it comes down to on the hardware side, right? And that's super bullish for NVIDIA. I think Street's underestimating numbers by anywhere from 20 to 30% next 12 to 18 months. And most of what I think this also means is like on the hyperscalers, in terms of everything we've seen from Microsoft, from Google, from Amazon, obviously Oracle that you saw today. I mean, we're only in the second inning of this all playing out. And all of our checks are just giving us more and more bullishness that this is going to continue. I think Street's underestimating it.
The AI revolution is no longer a prediction. It is happening right now at a speed the world has never seen before. But here's the shocking part most investors are missing. The fortunes of this decade won't be made by chasing the flashy AI models or consumer-facing apps. The real wealth will be created behind the scenes by the companies building the infrastructure that allows AI to exist, expand, and dominate every industry on Earth. And today, we're diving into 3 hidden giants powering AI supercycle from the inside out. They connect it, cool it, and teach it how to think. These aren't hype stocks. These are mission-critical, high-demand, high-moat businesses riding a multi-trillion-dollar CapEx wave that is only accelerating from here. If you want to position yourself before the next AI melt-up, these 3 stocks deserve a top spot on your November watch list. Vertiv Holdings, VRT. Let's begin with Vertiv Holdings, ticker symbol VRT, a company that has become absolutely essential to the operation of modern AI data centers. Vertiv provides the power management, thermal systems, and cooling technologies that ensure AI compute infrastructure stays online, efficient, and protected. With AI data centers consuming massive levels of energy and generating extreme heat, uptime and cooling are no longer optional. They are mission-critical. Vertiv's growth is directly tied to the AI CapEx boom we're seeing worldwide. In its latest quarter, the company reported $3 billion in new orders, marking a strong 15% year-over-year increase, and expanded its backlog to a record $8.5 billion, clear proof that demand is rapidly accelerating. This is happening as Microsoft, Google, Amazon, and Meta collectively plan more than $1.2 trillion in AI-related capital expenditures, placing Vertiv at the heart of this multi-year investment wave. Vertiv is also deeply integrated into NVIDIA's next-generation GB200 NVL72 rack-scale AI infrastructure through a strategic partnership with Dell Technologies. This means Vertiv systems will literally be powering the next wave of AI superclusters being deployed across the globe. Beyond hardware, Vertiv is transforming itself into a full solutions provider. With the acquisitions of Great Lakes and WattEV, it is now integrating software, real-time monitoring, predictive maintenance, and orchestration capabilities into its hardware stack, enabling AI-ready data centers to deploy faster and operate more efficiently. Financially, Vertiv is scaling in both growth and profitability. Operating margins are already in the high teens, with a target of 25% by 2029, supported by strong demand and operational discipline. The company also maintains a healthy balance sheet, holding $1.7 billion in cash with a manageable 0.6x leverage ratio, giving it strength, flexibility, and resilience. Simply put, NVIDIA builds the compute, but Vertiv delivers the power, cooling, and efficiency that keep those GPUs running. In a global environment where power demand for AI is surging and grid constraints are becoming real, Vertiv is indispensable both technologically and financially. ServiceNow now. Moving from physical infrastructure to the digital intelligence layer, ServiceNow, ticker symbol NOW, stands out as one of the most sophisticated platforms enabling enterprise-wide AI adoption. While hardware-centric companies like Arista and Vertiv build the AI backbone, ServiceNow is focused on integrating AI into day-to-day business workflows, allowing companies to operate smarter, faster, and more efficiently. After a temporary slowdown earlier this year, ServiceNow's AI-driven growth has sharply re-accelerated. In its most recent quarter, revenue grew 22% year-over-year, fueled by a 50% surge in AI-related deals, demonstrating not just momentum, but rising urgency from enterprise customers adopting AI. The company's revenue model is extremely strong and defensive, with 97% of its revenue recurring and renewal rates near 98%, giving ServiceNow industry-leading visibility and stability, especially valuable in a market still influenced by inflation, volatility, and high interest rates. Financially, ServiceNow operates with the efficiency elite investors look for. Free cash flow margins are near 30%, while operating margins continue to climb toward 15%. The company also reported $23.9 billion in remaining performance obligations, up 29% year-over-year, signaling massive future demand already locked in. Even with premium valuation levels, ServiceNow's consistent execution, strong margins, recurring revenue model, and accelerating AI adoption make it one of the most reliable and durable long-term AI growth opportunities. Arista Networks, ANET. Finally, let's look at Arista Networks, ticker symbol ANET, a company that has quietly become the nervous system of the AI revolution. Arista is capturing the rapid expansion of high-speed connections, linking thousands of GPUs across the next generation of data centers. Arista specializes in ultra-high performance, low-latency Ethernet switches and routing systems that enable hyperscalers such as Microsoft, Meta, and Amazon to train massive AI models without bottlenecks. Every time a GPU cluster expands, faster data transfer becomes mandatory, and Arista is leading that transformation. In its most recent quarter, Arista delivered its 20th consecutive double beat, with revenue climbing 30% year-over-year and operating margins reaching nearly 49%, which are exceptional margins in today's tech environment. Arista's financial strength sets it apart from most high-growth tech companies. With $8.8 billion in cash and zero debt, the company is not only profitable, but also extremely resilient and self-funded. Its ongoing share buybacks further reflect management's confidence in sustained long-term demand. Looking forward, the global data center market, currently valued at around $250 billion, is projected to more than double by 2032, driven by AI adoption and cloud expansion. Every AI model, chatbot, autonomous system, and intelligent application being built today relies on Arista-level networking performance to function at scale. While others race to design the AI brain, Arista is building the neural pathways that make those brains communicate, the hidden infrastructure that keeps the intelligence economy connected, fast, and frictionless. Together, Vertiv Holdings, ServiceNow, and Arista Networks represent the three foundational pillars of the AI economy: power, intelligence, and connectivity. This is not just an AI race. It is the construction of a brand new digital economy, one where the companies that are not just building products, but building the infrastructure for intelligence itself. While headlines focus on the flashiest AI models, these three firms are the quiet enablers powering everything behind the scenes. As global AI CapEx continues to rise and the AI compute footprint expands worldwide, Vertiv, ServiceNow, and Arista are positioned to benefit from one of the most profound technology transformations in history. If AI truly is the new electricity, these are the companies building the grid,